Yes, sir, we are just starting.
Good evening, everyone. Thank you for taking the time to join us today for this much awaited event. On behalf of Zomato Limited, we welcome you to the virtual brokers and analysts meet on the announcement of the company's forthcoming IPO. Before we begin, I would like to introduce the management and distinguished guests who will be addressing today's gathering. From Zomato Limited, we have with us Gaurav Gupta, the co-founder, and Akshant Goyal, the chief financial officer. Representing the BRLMs, we have Mr. Govind Khetan, Associate Vice President at Kotak Mahindra Capital Company Limited, Mr. Shashank More, Executive Director, Morgan Stanley India Company Private Limited, Mr. Sameer Sood, Head of Internet and TMT Investment Banking at Credit Suisse Securities India Private Limited, Mr. Gaurav Singhal, Head of Internet Investment Banking at BofA Securities India Limited, and Mr. Arvind Vashisht, Head of Equity Capital Markets at Citigroup Global Markets India Private Limited. We have placed all microphones on mute. After the presentation, we will open the floor for questions. The questions can be typed in the Q&A panel available to you, and they will be read out to the management on completion of the presentation. I would now like to invite Mr. Sameer Sood from Credit Suisse Securities India to initiate the proceedings. Over to you, sir.
Thank you very much, and good afternoon, everyone. On behalf of the management team of Zomato and my colleagues at Credit Suisse, as well as our partner bookrunners, I'm very glad to extend a warm welcome to all the participants today. We appreciate all of you taking the time out as members of the investment community to join us today for this meeting for the launch of the Zomato IPO. As you know, Zomato is a household name in India and is the largest technology platform connecting consumers, restaurants, and delivery partners. The Zomato team has achieved this position through over a decade of innovation and thoughtful execution of their business strategy. Today, the business of Zomato covers multiple parts of the food ecosystem in India and a few countries outside. And the business model includes some of the key elements of the global large players in this segment, including the business models of DoorDash, Yelp, and OpenTable. As you know, these food technology players, as well as other newer age internet companies, are becoming very, very significant and growing part of the investable universe, and indeed the market cap on all key global stock exchanges. So in that context, in addition to being an important milestone for Zomato, this IPO is also a very watershed and important milestone for the Indian capital markets. This IPO represents the largest consumer technology IPO in India, as well as the third largest private sector IPO till date. The IPO size is 9,375 crores, which will include a primary component of 9,000 crores and a secondary component of 375 crores. The price band has been announced, and it is between 72 to 76 rupees per share. The IPO will be opening on Wednesday, July 14th, and close on Friday, July 16th. We will also have an anchor investor tranche for the IPO one day prior to the issue opening. For this anchor tranche, we have received extremely strong interest from institutional investors that management has been meeting over the last few weeks. This interest is across all categories of investors, whether it is FPIs, domestic mutual funds, insurance companies, and all other categories of institutional investors. We will be able to share more details of the anchor institutional investor book after the book subscription happens one day prior to the IPO opening on Wednesday. Today, we have the pleasure to have the leadership team of Zomato with us, with Gaurav Gupta, co-founder, and Akshant Goyal, chief financial officer. I will hand the session over to them, and after a short presentation by them, we will have a Q&A session. With that, pleasure to hand it over to Gaurav.
Thank you, Sameer. Hi, everyone. Thank you for being here. We will actually go through a presentation now and take you through more details on Zomato, and post that we're happy to take questions. So the food services industry in India is highly underpenetrated. Only 8 to 9% of food consumption in India actually comes from restaurants. As we all know, we are mostly used to eating home food, and most of our meals come from there. And we're actually trying to disrupt that. We're trying to make restaurant food, of course, along with restaurant partners, make it more accessible, equivalent in quality or better in quality sometimes, and sometimes even like cheaper or equal to what you actually get at home, right? So I think that's the whole idea. There's a large headroom for adoption. Only 8% of the people who have access to the internet actually order food online in a year. Whereas if you see some of the developed markets, the food consumption for restaurants is as high as 40 to 45 to 50%. And even adoption by people who have access to the internet is as high as 38 to 50% in a lot of other markets. So I think there's a lot of headroom for growth. We have seen a lot of potential coming from tier 2, tier 3, tier 4 markets as well. And as we go forward, we will see more and more customers either trying food delivery for the first time and then getting into that habit. And we'll also see people who already tried it eating food from restaurants more and more often than they've done till now. So I think there are both vectors of opportunity out there. The restaurant industry, of course, has done a fabulous job of growing and meeting the demand that customers have placed in terms of food delivery or dining. We've seen good growth in the restaurant industry overall. And even in the future, as more demand comes in, we expect the restaurant industry to actually be there to support that demand. We are serving this market in a very unique, all-in-one food services platform. We're not just a food delivery player. We are actually a food ecosystem. So we connect users to restaurants for whatever they need. And based on that, they can either order food at home, they can actually use reviews and rating for dining out, they can use our loyalty programs for both dining and delivery. And for restaurants also, we deliver food orders for them. We get them diners at the restaurant. We also supply raw materials to them for Hyperpure business. So, Nenden, if you look at it, we are like, if you take an US equivalent, and that's why we are unique even globally, we are Yelp, DoorDash, OpenTable, all put together in one for India. And that makes us unique. Food delivery is our largest business, accounting for over 75% of revenue. We started the business as a search and discovery platform. So reviews and rating is what customers use on Zomato and actually enjoy their dining out experience. We're the largest online table reservation platform in India. We also essentially have a strong loyalty program called Zomato Pro, where members enjoy benefits on delivery and dining. It's a very unique program. There's none like this globally. At the same time, restaurants put part of this program. They benefit from the loyal members that we have for Pro, because these users are more frequent on the platform, they spend more on the platform, and that helps. Hyperpure is our endeavor to actually help even the standalone restaurants procure better quality raw materials at similar or even more competitive prices than what they do today. So we have set up supply chains to procure from farmers and farmer producer organizations directly and supply that raw material within 24 hours to restaurants. And we don't stop there. We actually tell our customers which are the restaurants on the app which actually use Hyperpure, which are in fact good quality raw materials, so that we can drive a better understanding of good quality restaurant food. So more and more customers want to try out restaurant food more often than they do. We started with a search and discovery platform. As I said, we added literally scanned menu pages online. People came for those menu pages. They added reviews and rating. The content became richer and more people came for that. And then 4-5 years back, we layered on a transaction funnel on top of it. So we used that customer base and traffic that were coming to us to serve customers with transactions like food delivery, table reservations. And now, of course, both content and transaction play come together to fuel growth for the platform and our ability to service customers with more and more offerings. And as we grow, as we do more transactions on the platform, we're able to drive lower transaction costs, which in turn, of course, benefit our ecosystem, which is customers, our delivery partners, and even restaurant partners. And as we do more and more transactions, we'll be able to make it much more cost effective and impactful for the ecosystem. Our business has scaled rapidly in the last 3 years. In fact, we've grown almost 10 times in the last 3 years. We invested a lot in 2019 and 2020. to build this behavior, build this category, to build a delivery network that can be leveraged very well. We, of course, have at the same time in the last couple of years focused on growth as well as making sure that our unit economics are better so that we can actually make this business more sustainable. First wave of COVID had a negative impact on the food delivery business because there was a lot of scare of the virus, surface transmission of the virus. But as the fear of surface transmission has gone away, both food delivery and overall businesses come back very strongly in Q3, Q4, FY21. We've delivered crores of orders in the last 18 months and not had a single case of transmission of COVID through food delivery or surface. And that's helped build some confidence in customers. And now they're ordering food either for their needs or they're actually ordering food for entertainment. Because guess what? When you're locked up at home, either you can watch Netflix for entertainment or you can actually have good restaurant food for entertainment, right? So I think people are doing that. And the interesting part there is that this is like creating behavior. Once you order 3-4 times, then you start missing it in your daily routine or your weekly routines. And that's where the habit picks up. And I think COVID definitely has accelerated that for us. I think I will ask all of you to ask the question to yourself, are you ordering more than earlier now? And even after COVID goes away, will you continue to order? And the answer, I'm assuming for most of you, would actually be a yes. Food delivery business has been contribution positive for the last 4 quarters. In fact, if you see last 8 quarters, it's been improving every quarter because we've consciously worked on it. And COVID has definitely helped accelerate our journey towards unit contribution positive. And it's been work on different elements and like all the elements that actually contribute to this whole unit economics. We've been working on that for the last 8 quarters now. We understand that whatever we do has an impact on the environment, and I think there's a lot to be done there. We've just started taking some baby steps. We're doing some projects to offset the carbon footprint of delivery and packaging. We've also joined the EV100 initiative by the Climate Group to commit to 100% electric vehicles by 2030. 20% of our deliveries are made on bicycles. Feeding India is an initiative we run as a not-for-profit to support and help the underprivileged. For example, in the first wave of COVID, the daily wage workers were very badly hit. So we raised funds and distributed almost ration kits worth 78 million meals across 180 odd cities. Oxygen for India was an initiative we did in the second wave of COVID because oxygen was scarce and that was a need. And we were able to raise funds thanks to our customers, our network partners, to be able to support with 9,000 oxygen concentrators. We continue to do as much as we can for our delivery partners and our restaurant partners. For example, we've actually done free vaccination for our delivery partners. In fact, we're also showing that to customers now. Our restaurant partners together with us have implemented a whole host of safety measures in the last 18 months of COVID to make sure food is being delivered safely to restaurants and even apply those safety measures in dining so that even when customers come back to their favorite restaurants, they're actually able to have a good time. So I think it's been a tough time for everyone, but it's been great to see how our delivery partners have been the real heroes out there all the time, delivering food wherever required, not scared and not fearful of this the virus that we went through. And similarly, our restaurant partners. So it's been great to see all of that. And I think as an organization, we're very cognizant of building cognitive diversity. And when we try to do that across the organization in whatever we can. Total IPO size, as we mentioned, is 9,375 crores. Primary is 9,000 crores. Secondary is 375 crores. The price band is 72 to 76 rupees. 14 July is the date when the issue opens, and the issue will close on 16th of July, which is a Friday. That's all we had for the presentation, and happy to take any questions that you might have.
Thank you, Gaurav and Akshant. We will now open the floor for the Q&A session. We have already received some questions. So while we take those questions first and wait for the rest of the question queue to build up, I would gently remind everyone to post their respective questions in the Q&A panel. We will try our best to ensure that all your questions are answered. However, given the paucity of time and the sheer number of attendees, we may not be able to take up all questions. The first question For the network effect to play out, it's very much required that all stakeholders be happy. Given the emergence of other platforms like Thrive Now and the complaints and concerns that are voiced by NRAI and restaurants in general, how do you intend to address these concerns going ahead?
Order Direct has always been there for all of us. If you remember, before food delivery platforms came in, we used to order on the phone to restaurants, right? Can I get this food for delivered? That's an Order Direct channel. I think what restaurants are doing right now is actually digitizing that channel now, which is a good thing. And they're also not saying that we're replacing the platform that exists. In fact, they're saying this is an additional channel that we want to build. And I think we don't see any threat from that. Customers will make that choice because at the end of the day, customers are looking for choice, they're looking for customer service. And that's why we will still be able to deliver 10, 20, 30 times more business to restaurants than the Order Direct channel. And we've always, in the last 5 years, enabled restaurants with tech as much as possible and tools as much as possible to service customers. And we'll continue to do that even going forward. Issues raised by the industry are concerned. Of course, there are always pockets of challenges that we have. Having said that, we continue to listen to work with thousands of restaurant partners. And they've done so well working with us to actually build this ecosystem over the last 5 years. I have a huge respect for all restaurateurs. They're very smart entrepreneurs, and they know what works for their business. They have a choice of all these decisions, and they take the right choice to grow their business. And that's how we see this. Some of the specific issues that have been raised, we think are misplaced. Having said that, we will continue to work with restaurant partners wherever these issues are raised to help them understand the perspective better and work together in a much better fashion to actually serve customers. That is always an ask, and we're always up for it.
Thank you. Next question. Are there any plans on entering the home-cooked food delivery market, since you mentioned that as one of your major competitors?
As of now, we don't do it, and I will not be able to share anything more given the guidelines that we cannot project or forecast anything in this conversation. As we already see a lot of opportunity in what we do today, and there's so much more to be done there as well.
Thank you. Next question. The advertisement expenditure as percentage of revenue reduced from as high as 88% in FY19 to 49% in FY20, and then further down in FY21. And due to that, your losses have reduced as well. Do you see this downward trend being sustainable, or is the advertising spend going to go up again in the future, to the extent that you can disclose?
Yeah, so I think again, we would not want to crystal ball gaze here in future, but I think over time, I think what happens is when a category is new, like food delivery was in India 2-3 years ago, we had to invest in making sure that we get enough customers to try food delivery, and that fuels the entire ecosystem of supply and demand, where people want to order food, and on back of that, we see more restaurants coming up in the country, which has happened over the last 2-3 years. All right, but as the business scales, the need to do that has come down over time, right? And that's why you see the advertising expenses coming down over the years, and I think, and hence the economics improving. I think going forward, it's going to be a function of how soon or how fast we find more growth areas, and that will dictate the direction of some of these investments that we have to do for the growth of our business.
Thank you, Akshay. Next question. What is the percentage of Zomato Pro users out of total users? And how much more do these Pro users spend, or how much more time do they spend on the app versus regular users? If you could give us any data points.
Today, we have about 1.5 million active Zomato Pro users. And if you look at our monthly transacting users in FY21, on an average, that was around 7 million, right? So a large portion of our active user base on food delivery is actually Zomato Pro member. And the benefits for Zomato Pro members extend beyond food delivery as well, right? So consumers get benefits and privileges both when they eat out at restaurants as well as when they order food. Of course, the dining out, eating out market has been muted over the last 15 months due to COVID. and hence a large part of the value for those customers has sort of gone away. But I think as it comes back, the value proposition will increase again, and we do expect the membership base to continue to increase going forward. These are loyal customers for Zomato. We've seen that their frequency and their engagement on our platform is higher than non-members.
Thank you. Next question. The next set of questions is about competitive intensity. So I'll just club them into one. What are your thoughts on the new age aggregators such as Thrive? And in the same breath, could you talk about the other competitors that are entering, such as Amazon?
So Thrive is related to the order direct feature that we spoke about. So they're actually a tech enablement platform. And as I said, digitizing an order direct channel is actually a good thing. We don't see it as a big threat. In fact, it's an enablement for the restaurant industry. And it is not a substitute for the platform that we have today, which give choice and great customer experience to customers today. As far as other competition is concerned, I would like to definitely make this point that competition is not a bad thing. I think it always gets asked in a very negative context. Competition is actually good. We did so well because of competition, and competition did so well because of us. And because of that, we actually built this market so fast, so well. So competition is good. We don't underestimate competition, neither do we fear competition. We know that we need to keep executing well, like we have, and we need to keep doing that every day to stay in the game.
Thank you. Next question. Even after a 40% YY increase in order value and 2x increase in delivery charge and 60% decrease in discounts, you're still some way away from profitability. Could you talk a little bit about your path to profitability and when you expect to be profitable, if you can?
So I think again, I think apologies, we'll not be able to give any guidance on this conversation on future profitability. But yeah, I mean, look, I think the first step milestone for us was to get to contribution positive as a food delivery business, which we've now done and demonstrated, yes, that this business can be contribution positive. And as we scale, the fixed costs below contribution, they don't really go up by the same amount, right? So over time, we'll see that the benefit of scale will start showing in the P&L of the food delivery business as we get more and more orders. The fixed costs remain same, and hence the business will become profitable. But yes, our business is a combination of many businesses. Food delivery is just one of them. We do other businesses also, which are more nascent and new than food delivery, like our Hyperpure business, for example, which Gaurav spoke about. And maybe in future, as we mentioned in our RHP also, we will get into grocery delivery as well, in a small way to start with. And as we sort of make some of those bets, those new businesses will require investments, right? So at an aggregate level, therefore, profitability is a function of all of these being profitable, which can take its own time. But as long as our more mature businesses start becoming profitable, we'll derive a lot of comfort from that.
Thank you, Akshan. That was really helpful. There are at least 10 to 15 questions along the same lines. So we may have to take that up again at a later stage, purely for the audience convenience. The next question. What are the sort of entry barriers that you see in this space? Don't you think any startup which is well-funded could disturb your online market business?
So over time, we've actually built capabilities around delivery network, an on-demand delivery network at this scale. The market and the industry has also evolved in terms of what kind of product feature set do you need, what kind of product optimization you need, and how do you provide a great food delivery experience to customers, because it's very different from what else is being done. And with every passing week and month, I think it gets even more difficult for any new player to come and supersede that kind of experience or capabilities. While the players who already exist are large and ahead, and they keep improving themselves. I think that fundamentally is the barrier. Can anybody try to do that? Absolutely. And as I said, I think we need to keep executing better to actually stay ahead of the game.
Thank you. The next set of questions is around grocery and hyperpure. How do you see the grocery slash hyperpure segment playing out? And are you going to ramp up this at a much faster pace in the near future?
So we look at, I think grocery is a large opportunity. The offline market in grocery is huge in India, as we all know. Online grocery market is relatively smaller today, but we do think that market will grow. As I mentioned, we do want to pilot that and start with a pilot in few cities to experiment and learn more about that business. And I think over time, slowly, as we get more comfortable and as we get more conviction around the business model, the right customer value proposition for this space in India, I think we'll sort of spend more time and invest more to grow in that business. Hyperpure, of course, is a different business. That's a B2B grocery business, right? And it might have synergies with our B2C grocery business as and when that we have that business in future. Yeah, so it'll be, I think, nice synergistic different businesses. While they're B2B and B2C, there could be synergies in between the two businesses that we could look at going forward.
Thank you. Next question. How do you pay your delivery partners? Is it on a commission basis or is it a flat rate? And what is the plan to deal with delivery partner attrition in the face of competition?
So we essentially, delivery partners get paid on a variable basis, and it's a function of various things, including how many orders they do in a day, the distance they travel for every order, how much time do they spend on a platform, and so on and so forth. Right, so it's largely variable in nature. And attrition, yes, is high in this space, not just because of competition, because of the nature of the job. It's physically demanding to be doing this in a country with extreme weather like India, right? So I think we do, most of the people who actually come and do this look at it as a temporary 1 or 2 year gig, and then they move on to do other things. Right, so I think attrition is high, but it doesn't hurt us because there are enough people who want to do this, right, and want to use their time in a flexible manner to get some top up income to whatever else that they're doing today, and hence we are always able to easily hire more people, when we need them. And I think we're glad that we're able to offer employment opportunities to hundreds of thousands of people in the country across 500 cities, and I think we would continue to do that going forward.
Thank you. Next question is again about the delivery partners. Are the delivery partners independent contractors, and do they use your own vehicles, or are these on the company books?
Yes, so they're independent contractors and they use their own vehicles.
Thank you. Next question. After the IPO, you'll be sitting on cash of approximately 15 to 16,000 crores. Could you tell us how this cash is going to be deployed, whether organic or inorganic?
Yes, so largely three use of proceeds of the cash that we are going to raise in the IPO. First one is organic growth of the business, where we would want to continue to invest in customer acquisition, which we have done over the last three years as well. We would want to continue to invest in growing our delivery infrastructure. And we would continue to invest in building our technology platform, right? So all these three are core pillars of our current business, and we would continue to deploy and invest in these areas, deploy capital, invest in these areas. Second bucket is any inorganic M&A or acquisitions or investments, right? So in the past also we have invested in companies or acquired companies which are strategic to our business, and we will continue to do that. Very recently, we have signed definitive documents to invest about 750 crores in Grofers. That transaction is still subject to regulatory approvals, but that's just sort of one of the ways we would want to deploy cash that we have in the balance sheet and that we raise going forward as well. And the third bucket is general corporate purposes, essentially, which includes everything else which is not covered in the first two buckets. So these are the three large, buckets of use of proceeds and the cash that we have in the balance sheet today.
Thank you. Next question. Our average order value has increased significantly over the course of FY21. How do you see this trending over the medium term, say when the pandemic dies down? And is there a certain theoretical AOV above which we can generate profitability?
If you look at it, a lot of these metrics of the business, as you see, has been a function of the evolution that we've seen over the last 2-3 years, as food deliveries become more of a norm and a service that customers are choosing to operate. So AOV, delivery charges, everything is part and parcel of that journey, and we are where we are today. And unfortunately, we would not be able to share with you as to how we think it can pan out, because to be honest, I think we also don't know. There are enough pulls and pressures here. For example, some of the great things that have happened because of the last 18 months is that a lot of premium restaurants that never used to do food delivery earlier have started doing food delivery for their customers, which is a great time to see. A lot of people who never ordered earlier have started ordering much more frequently because they found the need, or they found this as a source of entertainment, and that habit would change. So, what affects each of these behaviors? To what extent will they have in the future? I think we'll all have to see. But it's all a journey. Nothing has happened overnight. Nothing is because of one moment. So a lot of things have got accelerated because of COVID, but they were bound to happen, right? And I think it will take on from there now.
Thank you. Next question. How has the performance of your food delivery business been in your overseas markets? And how much is the contribution of overseas markets in the entire food delivery revenue?
So we're largely a India-focused business now. We have shut down our businesses in global markets. And I think we see the large opportunity in India in front of us, and hence we want to focus only on India going forward. Even when we had businesses outside India, they were largely the dining out business that we had, right? Our listings and reviews business plus the Zomato Gold business is what we had overseas. We only had a food delivery business in Middle East, and we sold that to Delivery Hero a couple of years ago. So apart from a very small business we have in one country in Middle East, today we don't have food delivery business anywhere else outside India.
And most of the international markets, we have a search and discovery platform that exists today, and we run it remotely.
Sure, thank you. Next question. Lower discounts have helped in reducing losses to a significant extent in FY21. What is the company's priority or strategy in the next 2 years? Is it top line growth and market share growth, or strengthening of margins?
Our priority, I think, is growth. Sensible growth, I would say, is our focus and priority. It's not growth at any cost. And to your point on contribution margin improving, it's not a function of only discounts coming down. As you would have seen in an RHP, it's a function of revenue going up, delivery cost coming down, as well as discounts coming down, right? So I think all of those things are important to note. And as we look forward, I think we will see areas of growth. We'll invest in them. Important for us is that investment in growth should yield in viable business down the line. And as long as within that framework, we see investment opportunities, we'll continue to invest, right? So sensible growth, I would say, is the focus for us.
Thank you. There are again a number of questions on the NREI and its direct delivery app. So I'll just take one question on that for the benefit of the audience. What are your thoughts on the NREI creating its own app, and thoughts on direct delivery?
So look, I think I would say that we are in a very competitive market, right? So a lot of people talk about just two players market, but it's not a two-player market, right? We compete with cloud kitchens, we compete with various restaurants which already have their apps today, right? For example, Domino's or McDonald's or Pizza Hut. We compete with restaurants who get orders through telephones, right? Or they do their own marketing, they have their own channels. We compete with restaurants who have takeout as a large channel, right? So there's sort of multiple ways restaurants sell food in the country, and players like Zomato actually is one of the channels that they use to connect with customers, right? So I think so. Therefore, there is already existing competition which exists, right? And we, restaurant for their own benefit should actually explore more channels to grow their business, and we would love that to happen. We have no issues with that. I think the size of opportunity in front of us is so huge, right? The restaurant industry we think is going to grow many folds in the next 4 or 5 years, right? And we don't expect to get an entire 100% share of that growth, right? That's not good for the ecosystem. So there would be other areas where restaurants will create businesses for themselves, and that's totally okay, I think, for the ecosystem, including us.
And just to remind everyone, the real market share we're all after, not just Zomato as an industry, is actually home cooked food. We want to be able to provide equal quality or more, cheaper or better, and faster accessible restaurant food, so that more and more meals can come from restaurants than just home, which is happening globally. And that's the thing that we're trying to be the catalyst for. That's the change we're trying to be the catalyst for. And we are not the only catalyst. There's so many, which Akshan just mentioned. I think all of us are geared towards that. So I don't think even restaurants are competing with each other. Restaurants are competing with how good home cooked food is. And I keep reminding them on that time and again. And that's the zoomed out larger picture.
Thank you, Gaurav and Akshant. Hopefully that will have cleared things up for the audience. The next question is on our subsidiaries outside India. These appear to be making big losses. So what is the plan for turnaround or closure of these?
So as I mentioned, we've already done close some of them, and I think over time we don't expect any meaningful losses from those businesses. Because in the process of either selling those entities or shutting them down, and in either case, I think it will be non-material to our financials given the small size of the business outside India.
Thank you. Next question. You recently acquired the sports discovery startup Fitzo. Are we looking to expand in the lifestyle space or digitalizing non-food leisure sector?
So our vision, to be honest, is about creating everyday happier lives. And we started that journey with food. And food is core for us. So it's not just food delivery, food from restaurants, but delivery, dining, hyperpure, which is raw material supply business, is very core to us. And we understand the capabilities that we're building. And now we're saying, how can we leverage our current capabilities, especially impact customers' life even more deeply and better? And there, grocery is one such pilot that we're doing. Fitness through Fitzo is one other pilot we're doing. We also done another pilot around nutraceuticals, which is about saying, can we serve nutrition needs for our customers better? Our core remains food, and we will continue to try these new things where we can add value to customers' lives, and that's just one of those aspects for us.
Thank you. Next question. On Hyperpure and on your platform in general, are there options for insurance and loans and financing for restaurateurs? And will that be an additional revenue stream to look into in the coming years?
Till now, we've actually supported our restaurant base mostly in terms of the support and the funds that they needed in the crisis time over the last 18 months. As far as Hyperpure is concerned, in fact, we have a very unique model where restaurants, when they actually buy from Hyperpure, we are able to deduct the money from their food delivery proceeds that come to us and just send them the balance money. So it's not even a payment. So it's a very seamless way for a restaurant to buy Hyperpure from us. They don't have to pay upfront for it. They actually collect it through the proceeds that we get for their food delivery business. So it works very seamlessly for them and for us. And the amount of benefit that the restaurant industry sees there, which is they don't have to deal with 30 different vendors. They have to deal with one vendor, which is Zomato. Everything is online. You can deliver last night, you get it the next morning. The quality of the raw materials are really good, especially for standalone restaurants who are not able to get such good quality raw materials. From that perspective, we've seen great offtake for Hyperpure business. Even in COVID times, we saw that. And I think that's where that makes a lot of sense for us to keep adding value to our restaurant partners to that part of the business.
Thank you. Next question. Could you throw some light on your plans to move into adjacent areas like maybe door-to-door item delivery or your own cloud kitchen strategy?
So I think, as Gaurav mentioned, I think, look, we would explore. I mean, for now, food is the core focus, and everything else is sort of either not there or we are experimenting with it. We don't have any concrete plans right now which we can share about any of the new adjacencies which you're referring to.
Thank you. Next question. Your EBITDA significantly improved from FY20 to FY21. Could you just walk us through on what are the reasons for this, and if this is a secular increase or is this based on one-offs?
Yeah, I think the reasons you'll understand if you look at the comparison of unit economics that we've given for a food delivery business between FY20 and FY21. Right. So essentially, the shape of the economics, the form of the economics changed substantially, not just in the last 12 months. I think maybe the impact is now being seen in FY21, but the journey for us started in the beginning of FY20. And I think that's why the overall losses have come down significantly over the last year.
Thank you. There are again a number of inquiries around the Grofers piece of news. So I'll just club it into one. Could you just walk us through the rationale behind our investment in Grofers?
Yes. So it's a proposed investment. It's subject to regulatory approvals, just to clarify. But we're only taking a minority stake there of about 9%. So it's a financial investment for us right now, and it just gives us the right to work with them in future if we want to, on an arm's length basis. As I said, we do believe that grocery is going to be a large opportunity in the future, if not now. And having a minority stake in perhaps now the only or the largest standalone online grocery business, I think will help us going forward as we crystallize our vision around this space.
Thank you. Next question. What is your mix in terms of delivery, tier 1, tier 2, and so on? And which is your strongest sort of segment in terms of revenue?
So it's a fairly deep market in India. I think we are in more than 500 cities. And everywhere, I think what we have seen is that the adoption of the service is pretty great. Consumers, the penetration levels are going up even in smaller cities where 2-3 years ago, no one would have imagined that people would order food. Forget even that, I mean, people would use internet, right? So thanks to the data penetration and smartphone penetration in the country, almost everyone in India now has access to internet. And once we launched food deliveries as a service, as an offering in these cities, we saw a massive ramp up in demand, which is again fueling this whole ecosystem of restaurants and more restaurants coming into those cities, which is again fueling more demand. So I think, yeah, still early stages in many of these smaller cities, but it's great to see adoption picking up. And we can't share specifics or data points around our size of the business in tier 1 versus other cities, but suffice it to say, I think we're very bullish about a lot of these cities actually becoming very, very meaningful for us in the future.
3 years back, when we went to these tier 2, tier 3, tier 4 markets, we were very pleasantly surprised in what potential we saw there. I think, and we continue to remain invested in tier 2, tier 3, tier 4 markets as well for today and future growth.
Thank you. The next question is on valuations. How do we value a company that is making losses, at least optically? And how would we try to understand the valuation at which Zomato is in the market?
I would let Sameer, Shashank, or Gaurav Arvind take that question. I think banks have advised us on that, and maybe they can shed some light.
And the only thing we can add is, I think it's just first principle, valuation of a company is dependent on the current strength of a business and the future potential. Right. And I think that's the baseline. But again, yeah, Sameer, Shashank, or Gaurav can explain more.
Sure. I'll take that. No, I think from a valuation perspective, we have had extensive discussions with institutional investors. As I mentioned earlier, we have interacted with investors across geographies, both domestic and global, as well as across categories. And we've actually found overwhelming interest, and valuation feedback from them has been very positive around this range and at higher levels as well. So this is a function of how investors have experienced the evolution of this space globally in multiple markets, the opportunity ahead for Zomato in India as well, and just the massive penetration as well as adjacent opportunities that Zomato has in its core business and other aspects of the business as well. So this is based on investor feedback that we have gathered extensively through interactions with global as well as domestic investors.
And to add, the valuation reflects the founders and management's desire to leave something on the table. The kind of enthusiasm we are experiencing for this issuance is just through the roof. And given this is the first pure play consumer tech story to come out of India, has its own charm. And also, I would add that this is, if you contextualize it in context of the fact that the company has raised several rounds of private funding, and this is just a continuation of that momentum and continuation of that valuation curve. And that gives us a lot of confidence. And as Samir said, this is very well discussed and feedback taken from lots of savvy investors across the globe. So should not be a problem there.
Thank you, sirs. Next question. Could you please explain your revenue model? So, for example, say I order 500 rupees of food. What would Zomato get as a commission? What are the delivery charges? Are the delivery charges reimbursed to the delivery partner? So, could you please just explain that?
So I would request, this information is readily available in our RHP, right? If you look at the unit economics chart. So it lays out what we get from restaurants as commissions and all the components which contributes our cost. So I would request if the person who asked this question can refer to the RHP for this information.
Thank you, sir. Next question. What is your strategy towards increasing the value per order, as it seems critical in helping making order economics profitable?
So it's not necessarily true. I think for the current order values that we have, the current business model works in terms of profitability. Hypothetically, if the order value were to be 1/4 of that size, you can still build a profitable business, right? The nature of business and how you do that business will change. Right? So we don't think that the order values need to be what they are today for us to be a profitable business. We're not saying that it'll fall to 1/4 the number. All we're saying is that it's a function of how you run that business and how you make that business viable at lower order values. But we were pretty confident that our order values, have over time grown. In fact, we're about coming down. So we don't see them changing materially, and hence there's no need to worry on the economics front.
Thank you. Next question. As per your offer document, you have applied for a payment aggregator and a gateway license. Could you elaborate on your plans there?
Yes, so this is as per a recent RBI directive, basis which people who essentially connect e-commerce merchants to payment companies need to apply for a license, for a specific payment aggregator license. So this is not a license that we are applying to do something new. Essentially, what we used to do as for enabling payments on our platform now requires a license, and hence that is what we are going to do. It's not going to change anything that we do, or it's not going to result in us doing anything new. It's as per the RBI directive, essentially, where they have said that for doing what you do today, you need this license, and hence it's just a very procedural thing that we're doing.
Thank you. Following up on a question from the offer documents, you appear to have written off some bad debts. What is the business through which you've incurred bad debts when your chief business happens through app and post payment?
Yes, so there are parts of our business which are not prepaid, right? For example, when restaurants they advertise on our platform, they pay us money over time. Some part of our hyperpure business also, the payments from restaurants come over time, right? There are various vendors, we use their services and or we offer them our services, and hence there are payments that they owe us. So I think it's a combination of all of that, and the bad debts amount are not meaningful given the overall size of our business.
Thank you. Next question. The food delivery market is currently more of a duopoly, with each player claiming that they are the market leader. Could you please elaborate on how you calculate market leadership or market share?
I think as we said earlier, we're very focused on building out the opportunity in front of us, which again, I said, is about getting more home cooked meals to be replaced by restaurant food. And if you really look at market share there, even like the players that are there today, they have very little market share, right? Because we're still eating a lot from home. And that's what we're after. So we don't overtly obsess about any other player or what market share we have. I think there's a long way to go to build this opportunity to grow restaurant industry and the food that we serve customers. And that's what we're after. And that's what we'll keep doing.
Just as a clarification, I think we are not claiming, and we don't have any way to actually measure a market share very, very tangibly, right? Because data is, we are all private companies, at least so far, right? And what you see in the RHP is actually from a third party report that we commissioned, right? So it's as per their analysis and knowledge they've shared with us that we are the category leader in the space. And that report again is also available for inspection if anyone wants to go through.
Thank you. Next question. In FY21, your other expenses have come down to 1528 crores from nearly 4,000 crores in FY20. Could you walk us through how this has happened?
So it's a function of our delivery cost coming down. Also because we've now as the efficiencies have kicked in our business, as you see in our unit economics, the delivery costs have come down. So that's been one reason. Our sales and marketing costs have come down as well, right? As we discussed earlier on the call. So it's most of our costs actually currently sit in other expenses, the way the accounts are drawn, and hence you see that reduction in FY21 over FY20.
Thank you, sir. Next question. How or why did you arrive at the plan to list in India rather than the US, which is a far more mature capital market?
We are based out of India. We love the fact that we're building this opportunity in India. We have so much customer love in India. We couldn't find a better answer not to list in India. So it was as simple as that. And we're very fortunate to get the love we got and the trust we got customers. And I think also puts a lot of responsibility on us to make sure that we do everything and anything that we want to do going forward to build on this trust and make sure we don't delete from it. So yeah, so we're very excited to be actually listing in India.
Thank you, Gaurav. Next question. One of your Chinese competitors, Meituan, has entered into new segments such as hotel bookings or travel and now grocery as well. Do you see the industry developing in the same way in India, where players start out in food but then move into adjacencies?
Hard to predict. I think we don't have a point of view on that. We will see how the landscape changes. But yes, I think there are large opportunities out there. Most of the internet categories in India are still very small, right? So we will see who builds what. But yes, I think it's going to be exciting. The next 5-10 years in Indian internet is going to be exciting.
Thank you, Akshan. Next question. What has the response from the customers been like for the health segment that you've entered, like supplements, vitamins, and nutraceuticals?
It's an initial pilot for us, as I said, and we were basically trying to understand if we can cater to needs for our customers. And that's what we can share with you at this point in time.
Thank you. We're coming to the last few questions now. Could you talk a little bit about the take rates in the industry? So the all-in take rate by food aggregators such as Zomato or Swiggy is about maybe 22 to 25% in India, and it's significantly higher than the take rates in the rest of Asia or in the US. How do you see this evolving, and is this likely to go down or come up?
So we believe the take rates in our market, of course, have to be sustainable for the ecosystem. Otherwise, the ecosystem won't work. Restaurant partners, as I said earlier, I think are very smart entrepreneurs. They know exactly what works for the P&L and what doesn't. And we don't even believe that our take rates are actually much higher than global benchmarks. In fact, if anything, they're very comparable or sometimes even lower. And I think once more understand that take rate is given for some services that you offer. At our size and scale, we offer delivery, fast delivery and long distance delivery to restaurants. We offer customer support, tech support to restaurants on that. And we also acquire customers for them like they can never do on any other platform. And because of our scale, all these costs put together are also very efficient compared to if they would do it themselves. So a lot of restaurants understand this. And I think There's of course always some healthy debate between this, because as two parties, you always want to maximize the gains for yourself. But I think we believe, looking at feedback and working with thousands of restaurant partners, that we're actually offering a lot for what we're charging, which we actually want to do because we want the industry to grow and we want to provide great customer service at the end of the day. And I would say that even customers have actually put the best foot forward by actually starting to pay delivery charges, because they understood that this is a great convenience they're getting, and why should only Zomato or only the restaurants bear the burden of the delivery? And they've actually started contributing that. So I think the whole ecosystem is evolving to a much better shape, and we're glad to see what we're seeing right now, and we continue to adapt going forward if required.
Thank you. Next question. What is the outsourced support cost, which is mentioned in your other expenses? Could you tell us a little bit about that?
It's essentially largely the delivery charges that are the delivery costs, the payouts that we do to our delivery partners, and few other call center related outsource costs.
Thank you. Next question. Do you foresee any issues with the unionization of the delivery partners? And is there a potential pain point there?
No, I think there's no reason for us to believe that that's a risk to our business so far.
We understand that restaurant partners, delivery partners, and customers, there are three pillars of what we are trying to build on. And we are very cognizant that we do the right things for them. And to be honest, I think we just want to do what is right in terms of making sure that they are able to perform at their level best to serve our customers, right? And that's the mindset we go in. And again, we've spoken so much about the restaurant industry. I'll give you another example. We've never done our own brands of restaurants. And the reason is that we don't want to compete with the restaurant that we're trying to grow. And I think that mindset of making sure we do whatever we do for in the restaurant industry, because that will mean growth for Zomato, is very well embedded in what we do and how we do things.
Thank you. We'll just take the last couple of questions now. The monthly transacting users appear to have fallen a bit. And is that a case for concern, especially post-COVID, when food delivery numbers might not see the uptake because one is no longer at home?
That was an impact of the first wave of COVID, as you mentioned, because the fear of transmission of the virus was very high. As the fear of the transmission has gone away, you would have seen the Q3, Q4 numbers in the DRH as well, and the business come back up very, very nicely.
Fallen a lot, not a bit in FY21, but I think, again, as Gaurav mentioned, it's a temporary impact of COVID.
Thank you. And last question for the day. What are the costs, if any, on skilling your fresh recruits, if you could throw some light on that?
Negligible. I think all our onboarding and training for our delivery partners happens on the app. Right? So it's purely digital. We don't have any physical onboarding centers or anything of that sort. Right? So the cost is just development of software and technology that we need to deliver that digital onboarding and training experience, and we do it through that. So it's hardly anything. It's negligible.
It's amazing to see how restaurant partners and delivery partners have adopted technology to do what they do over the last 5 years. From where we were to where we are today, everything happens in the app seamlessly. And that's great to see, because that is what real scale and most efficient scale looks like. And of course, there's a lot more to do, but I think it's been heartening to see to what the ecosystem have come up to.
Thank you, sirs. That brings us to the end of the Q&A session. And to put it into perspective, we've got around 350 questions. So it might not be possible to take all of them, but we did try. And of course, the participants can write in their questions as well. But for now, I'd like to hand it over to Mr. Shashank More from Morgan Stanley India Company for the vote of thanks.
Thanks a lot. Good evening, everyone. And thank you all so much for taking time out today for this session. As the management highlighted over the last 1 hour, the way we all see Zomato, it's one of the largest food services platform in a very highly attractive and massive market. Very strong network effects driven by unique content and transaction flywheels. Widespread, very efficient, hyper-local delivery network. A tech and product first approach, and has built a very, very strong consumer brand synonymous with food. Has a financially robust business model with positive unit economics for food delivery. I just wanted to summarize this at the end as the takeaways for you. We are privileged today to be a part of this leg of Zomato's journey. Zomato's IPO event is a milestone, not only for Zomato, but also for a large investor community and the new age tech companies in India. Because once this IPO happens, I'm sure many more such listings will happen in the future. So it presents a big milestone for the community at large. Thanks a lot, everyone, for attending this session.
Thank you. And thank you everyone for joining the virtual brokers and analysts meet of Zomato Limited for their forthcoming IPO. Please feel free to reach out to us for any further queries or email us at ipo@adfactorspr.com with your queries. We will do our best to reply to your queries within 48 hours. Take care and stay safe. Thank you.
Thank you, everyone.
Thank you, everyone. And thank you, Gaurav, for moderating this session very well, in spite of 350 questions. Thank you. Bye.
Thank you. Bye.
Recording stopped.